Okay, thanks for the kind introduction, Rajni. Looking at what's happening globally in the last week and 2 weeks, I'm sure now everyone would be exploring careers in risk management also. With the emergency situation in Sri Lanka, with the interest rate hikes recently, and also with the heat wave we are facing right now, I'm sure like there are many opportunities for you all to explore. And for that, it's my honor to invite Dr. Leena Vijayvargiy. She is the head, she's managing risk for HDFC AMC, and before HDFC AMC, she was heading the risk management function at BNP Paribas, and she started her career at SBI Mutual Fund. So it'll be nice to hear from an industry expert on the various options of risk management. I'll just invite Dr. Leena.
Good morning. I hope you all are not feeling sleepy, and I'll not make you further sleepy. I thank Archit and CFA Society to invite me here to address a very important topic, and I think I'm very, very happy to meet you all here because I think this is the right time. We should be talking about careers in risk management. There's a lot of changes happening across the globe, in India, in regulation, everywhere wherein we have a lot of demand of risk managers. With that note, I think I'm making you feel positive and happy. So good morning. Thank you for that. So let's just start with what exactly we want to look into a risk manager, but I'll give you two magic things. One is that you have a great opportunity to be a risk manager in India itself if you're not planning to go abroad. Abroad is also a good option. And second is we all are risk managers, being human. So I just want to start with an example, which is a daily, day-to-day life example in our home. When a child is born and we don't let the child, go near the things which are harmful. We don't let the child go to places where it can fall. What do you think we are trying to do? Risk management, right? So what I'm trying to convey here is that we all have the faculty of risk management, and since we all have it as common as anger, happiness, as a human faculty, I think we have the risk management capabilities also. Let us see how we can, inculcate them more towards how, if you are going to get into an investment business, where exactly it is, how it is structured, and how we have to build it more further to have a career in risk management. With that, I will start with my presentation. So what all I would cover is we'll just give you an overview of what exactly to understand what risk management means in terms of the practical world in investment business. We will just look at the evolution of risk management. The good part is all challenges, all events, all frauds, and I want to be very positive, leads to a lot of opportunities, okay? So even if we have crossed the pandemic kind of a scenario, I would like to announce here that we have a lot of opportunities in risk management because now we know much more than what we knew 2 years before. Second, I will let you know, we'll just keep it to that. I will just let you know what would be the actual good starting point from investment perspective. Then we will look at the skills and competencies that will be required based on the type of risk that you want to deal with. Here you will have to be judgmental about what exactly you have as a capability. Where do you want to, enhance your skill set? But I will just give you what skill sets are required for each type of risk and the growth path of a risk manager. And the last that I've been talking about is the challenges, opportunity and challenges, and also There are some perception gaps in risk management as other fields, so I would then take up that also. What are we dealing with as risk managers? And last but not the least, I'm very thankful to Praveen. He touched upon being human, and that is where, after experiencing 15 years in investment business and risk management, at the end of the day, I think any person who is there at the top management would just talk about softer skills, ethics, and culture. So I will end with that. We'll go to the next slide. So I just have two quotations to set up the premise. One is given by Warren Buffett. Risk comes by not knowing what you're doing. So the essence is risk awareness. Risk awareness is the key. If you are risk aware, and honestly, if we belong to India, which is a very spiritual country, we all have underneath very strong concept called consciousness. If you do have focus, you have consciousness, and you have risk awareness, that is a very big thing that you have for the organization as well. Second is what, can I just go back? The essence of investment management is management of risk and not management of returns. And any person in the investment business would, I'm sure, echo with me, we can manage risk. And how? There is risk management. I would say there are basically 4 parts to it. Based on the risks that you have to understand what exactly are you going to do with that risk. So first, let's take up from the extreme right, risk acceptance, okay? Not everyone tries to reduce risk. If you start reducing risk in an active portfolio, you will make up an index portfolio out of that. So you don't want to reduce risk all the time, okay? So what we want to do is you have to accept risk, and then with acceptance of that particular risk, you start managing it, okay? So how do you do that? You have tools, you have policies in place, and you will accept that risk and manage it. Second is risk avoidance. There is a part of risk that you just don't want to take it. So you be very clear with that. You be clear with your concept that you don't want to have that particular risk, and you just avoid it. For example, there are products, complex products, that investment businesses say, no, we are not ready for it, so let's not go in for that. I'm just giving you simple examples. Maybe we can take up in Q&A session if you have certain more specifics. The third one is the risk transference. Now, risk transference is a very good example is insurance companies, vendor outsourcing activities, wherein I belong to a mutual fund industry, so I would just quote those examples. So mutual fund industry, basically, when we outsource the back office activities, RTA activities, we don't want to take certain types of risk, we do that. So we just transfer that kind of risk, and that is managed with people who have better tools and expertise in that. And the third one, and the last one, is the risk mitigation. And risk mitigation is very important from an organization perspective, because now we have to have that risk, we have accepted it, now we want to mitigate it also, because we have to stand by it. And this risk mitigation involves a lot of risk manager capabilities. Risk mitigation needs a lot of controls, and we need to sit with each and every person in the organization and understand their perception about the risk and see how we can manage it. We can go to the next slide. So in investment businesses, these are the type of risks that I can highlight. And good part is that I think in the CFA also you touch upon most of the risks here mentioned as investment risk, credit risk, liquidity risk, and governance. I will just touch base as to what exactly we mean when we get into these kind of risks. So investment risk is something that generally for the portfolio business management, we deal with it through parameters like risk ratios, like risk attribution tools. Those things are there to manage those kind of risk. And as I said before, we have to be risk aware. So we need a lot of data analytics to get into the risk investment part of risk. Credit risk is a very, very important risk. We all have been dealing with it. We have certain events that has happened in India very, very recently, and that has been a focus area for a lot of investment businesses. And credit risk is a good kind of risk where we need to engage more in terms of issuers engagements and to understand the governance as a whole in the industry. So that is a part of risk, I would say, needs a lot of focus and people like you to get into those kind of areas which needs a lot of research. Liquidity risk is it's talked about like day to day now. Government is trying to handle liquidity. We are trying to handle liquidity in mutual funds. There is so much of uncertainty. The first thing that gets impacted is liquidity risk. So there are a lot of regulations that have come in and a lot of policies that have come in and the processes that we have to set because of the liquidity to manage liquidity risk. So this is a good area that is covered right now from perspective of how it has been organized. The last one is the governance risk, and governance is, I would say, topic of whether you consider it in ESG, whether you consider in any of the analysis that you do. Governance, as I said, is related to the softer skills as well as the structures and how the organization handles their own risk management. So it really talks about the Stewardship Code and all those things that the regulation has come in. The other side is, I'm not going to explain each and everything. I think that's quite explainable, but we can take it later and you will understand what exactly I mean. The most important of all, I will just try and highlight, is operational risk. Operational risk encompasses everything, including investment risk also, because it talks about how do you overall control the risks that you have in the organization. So basically, what I'm trying to say here is we'll have a lot of policies in place, we will have a lot of processes in place, and also we'll see how we are going to interrelate between the departments, how the risk is cascading. Operational risk is very, very communicative, and it has a cascading effect if it's not taken care of. So I would just highlight later also in the operational risk bit, because that's one thing that can also, would be an interest area for your career growth. We can go to the next slide. So if you can keep clicking to that. So this is what we have made from the evolution perspective, and I wanted to just highlight, these are not the events that are exhaustive in nature, but these are the major events that has led to lot of changes in the risk management, the way it is perceived. So each and every event here has an impact. It has led to regulatory changes, it has led to organizational changes, and over and above everything, it has led to perception about risk change. And that is very important. The most important thing is, at the end of the, can you please click that again? What exactly, and today I have ended it to the COVID and also to the, so these are the, I don't want to highlight each and every of them, but each one has an important role to play in the history of risk management. Can we go to the next slide? I don't know, I hope you all can read it, but I just want to come to the end of it and tell you what exactly what I want to convey. So can you please click that again? I don't have the click in my hand. Okay, very simple, 3 word of learnings: better information, more disclosure, and greater transparency. So at the end of the day, this is what we have learned overall from all the possible events that happen in the history. I have dealt till the cryptocurrency and ESG. We will go to that once we come to the type of risk that you can deal with. We can go to the next slide. Now you need to understand where will you stand and what is the importance of risk management when you are in an organization, and how the regulator now has actually told us to have a very, very independent kind of a risk management. So the common perception is risk management function will deal with the risks that is there in the organization. No, it is very much clear now with, and I'm talking about the CFA regulation because I belong to MF, how we have a clear 3-line of defense wherein each of the department heads become the risk manager of their own function. They should very well understand their risks, and they should very well understand what can go wrong in their own function. Risk managers are there to support them, to instigate, to catalyze the processes that we have for risk management, but definitely they are the owners of the risk happening in their own function. That is where the first level of defense of risk happens. The second one is the Chief Risk Officer and the CEO level, wherein we are there to see if everything is getting recorded, policies are there, if the processes are there, there are control functions, there are control in place, but then again, that is only the second level, and it has to be independent in nature. And the third one is the board level, and the good part is the regulation itself suggests that we should have emphasis and we should have a risk committee of board, both, and since I'm an MF, so both AMC and trustee should have a risk management. So you understand the importance, that so much of importance is laid on risk management now. Previously in our businesses, what used to happen, compliance and risk were interchangeably used and also operating like that. But the things have changed now, and risk management is supposed to be an independent function in the organization, taking care of each and every risk that we have, and has to be reporting to the board, which is a very strong responsibility, I would say, as well as power given to the risk management function. We can go to the next slide. So, and I have emphasized on the point that we have independent and specific risk function. So the CXO level officer is responsible for his own function. Then you have board level risk committees. We also have internal level committees that we should have on monthly basis. So it is rigorous now. We have to have a lot of things that to be reported on the monthly basis. Then we have clarity of responsibility to an extent that we have been told that the roles and responsibility related to the risk management has to be uploaded on the website, which is a very, very important thing and a change that I would say. We have to be very clear on what roles and responsibility and we have as a CXO or as a CRO for that matter. And the last one is delegation of power, which is again taking care of day-to-day activities of risk management, which says every backup should be clear with us. So with that, you may understand what exactly, is the importance of risk management in the industry and investment functions. So the basic, how would it work is very simple. We have identification of risk. We have to report risk, and I have told you what are the committees. What is the measurement, and I'll go to the measurement later, because measurement of risk is completely dependent on the kind of risks that we have. For example, investment risk, Mr. Praveen Goel was there. BlackRock is one of the very good providers of the tools. We have a lot of other tools for risk attribution, risk management in investment side. Then we have operational risk, where we had a little bit of challenge before, but now we have a lot of tools from the operational risk perspective also. So that is there. And the last one is how the organization is governing all that. Can we go to the next slide? So I come back to the real topic, which I'm sure you all were interested in. How do you start with risk management career? For that, I just want you all to think about yourself, your skill set, your area of interest. Academically, I would say, and I'm sure you all are already gone to a level where you're not starting your career in learning, but definitely I would suggest anything to do with the statistical background, data sciences, and that now is the core to everything, all the learnings that is required. So that is something professional, academically you can acquire. Certifications like CFA, also certifications like for risk managers like FRM, there are other risk management certifications, definitely help to form a base of being a risk manager. But going ahead, experience is above all. I would say, where do you start? And I would not, and that's my personal advocation, that not to start with the risk management area directly. Try to have a sense of what is going on in a function. Decide your particular area of expertise and see where do you want to understand, what do you want to do. Because if it's, suppose you are interested in investment risk, go ahead in dealing, go ahead in fund management, go ahead in research analyst. There you will understand what is the importance of processes. There you will understand what can go wrong, okay? If you go to a risk management function, just start, analyzing risk management and investment function, you will miss out on a lot of things. So I would suggest spend some time to form the foundation of your career. Get into a function where you are interested to learn more and develop your skill at the same time. So if it is investment and market risk, please try and work like some bit of your career in that. And I am telling you with my personal experience, it's a long way to go, and these experiences really, really help. So try and do that. So if it's investments, I have already said you can be in dealing, fund management, research analyst. If in operations, then you can be actually into accounting, finance, audit. There are a lot of operational activities that has a lot of small little risk, cropping up from some places. And whatever experience that I have, you should have the capability of understanding what a frequent risk event can actually have an impact on each and every function that you are actually going to. So I have seen that there is an interrelation of a small little error happening in operations team or a back office team leading to such a big event in sales and marketing arena. So that is how risk is interrelated. So you should understand the importance of the whole function as a whole, and then try to understand what exactly is of interest to you. Audit is also a very good exposure if you are working in some or the other kind of audits. It gives you a lot of exposure to most of the functions. And I have listed down all of these, but I would actually give them hierarchy as the way they are written. But I understand, and I've kept risk management at the end. IT, for that matter, is completely different, and IT risk, cybersecurity is something very, very taken very differently. Regulations are also coming up differently, and they are very, very sensitive kind of risk, needs a lot of expertise in that area. We can go to the next slide. So this, I think, is the crux of my presentation to you all, because I believe that you want to understand which part of the risk you want to place yourself in. So if it is investment market risk, let's be sure we have to deal with numbers. We have to deal with statistics. You have to deal with analytics. And above all, modeling. And I'm very thankful that I heard the presentation of Mr. Praveen Goel. You don't know what is happening in the fintech. We don't know what is, model can be framed, but you don't know what is happening in the, inside the model. That is a risk that we call as model risk, and this is where you have to deal with it. So investment and market risk is something to deal with completely, to deal with data, to deal with analytics. So there you have to decide how do you want to go about it. Courses related to that, starting your job nature, job profile related to that would be helpful. And I would say risk management is the key. Why I have written that? Because if you see in portfolio management, you manage risk, you don't reduce risk, you know what your risks are. For example, if you know that there is a volatility in the market, what is your strategy to manage that? So all those things in the investment field is very important. You need to understand the risk parameters. You need to understand what do you mean by beta and what do you mean by tracking error, what do you mean by IR, how is it impacting your portfolios. Each and every the analytics and fundamentals around that should be very clear to you. So I think courses like FRM, CFA, they teach you all that thing. Be very thorough with whatever fundamentals you have and go ahead with the investment market risk to understand each and everything, how does that impact and how it is managed. So risk management is a key if you are into investment and market risk. Second is operational risk. Operational risk is, I have again said here communication, because operational risk is around the organization. We need to understand that a small Excel error that I have made here sitting in operations team has led to a very big change in the NAV, which, and again taking a MF example, which is going to go on the website next day, and it is reported. So small error happening every day, if I'm going to hide it, is not something that is required. And then in operational risk, one has to be very clear that we built up a culture for making people understand that each and every risk has to be reported. In operational risk, as I wanted to mention before, there are tools of operational risk called RCSA, which is risk control and self-assessment, extensive operational risk activity, wherein risk management team has to engage with each and every employee of the organization to make them understand how they can assess their own risk. So when they assess their own risk, they have to think end to end. They have to understand whatever they're doing has what risk bearance on other part of the businesses also. So one has to not say that, okay, it was just an error today, it chalta hai and we'll just hide it somewhere. No, we have to make them understand it's okay to, report it, and let's just have the frequency. Let us just have the history of things that is happening, because you'll understand if once you'll be a risk manager 10 years down the line, that it is very important to have historical incidents in place. You can go back and see, what happened, why did it happen, and it really gives you a linkage between the things. So that is where operational risk activities are very important. Another thing is that we do in operational risk is control testing, wherein we design the controls over all the risks that we have. So what we are trying to do in operational risk is to identify every bit of risk that we can, because as Warren Buffett said, we should be risk aware, and that's the key. So we have to be risk aware. And how we be risk aware? We need to talk to each and every department, to each and every employee, make them understand what does it mean if you are bearing a risk at your place. The last one is reputation fraud risk. Very scary. Nobody wants to have that, but we still but from risk manager's perspective, I would always say that every fraud incident, for that matter, gives us a lot of learning, and we should just take the learning, because let the fraud be fraud and let it get tackled at the place. But I would just say, just take the learnings in hand. Forensic in nature is something that we have to be there. So it is very, very vigilant, being very vigilant, tapping each and every activities. So those kind of things, if you are interested in, that is the reputation part of and fraud risk kind of a thing that you will have to deal with. It needs very close monitoring, as I've said, and it has a very strong role to play. Reputation risk is something that is once it happens, it takes years for an organization to come back, to regain itself. So that is something that is taken very seriously by all the organization. Anything leading to reputation risk is very, very serious about it. So let's just see where exactly we belong and how can we contribute to the reputation risk. And risk mitigation is very important. I'll just tell you a small example on fraud or risk that we can, and very, very simple thing we have in our organizations. We go to block leaves, and you know what it is like a fraud risk tool. And can anyone tell me how what happens when you go on a block leave? Any guesses? Am I not supposed to interact? Yes. I just wanted you all to wake up. I've given a lot of gyan till now. So can we just hear?
Am I audible?
Yeah. Who, where?
Hello.
Hi.
Yeah, hi. So to the best of my knowledge, this block leave concept works as a tool by the way that if someone is not present at his function, his or her, with all due respect, so what happens if someone is not present in his function, someone else would carry out. And if anything wrong has been happening during his presence, we would be able to easily find out that the person working before, who is on leave has been doing some kind of error or has been doing some kind of fraud. So that is basically it works as a tool.
Perfect. Any other answer? That's what, right. So a block leave, you know, what it does, it removes your access completely from the system. Should be. If it's a risk management tool, it should be. So suppose a person is going on a block leave, there are two things that happens. One is, of course, the kind of processes that he's following gets checked. Second is, you know, you have, psychologically, you have an eye which, when you see things every day, you tend to unsee the errors that's happening in your files, in your sheets, in your tools. Okay, so it works both ways. It works in terms of a psychological tool for a brain, human brain, and secondly, it also works from the perspective of how things are looked at by some other employee in the organization. So then the other person asks, why is he doing this? Why is he? So there will be two good things about it. He will change the process completely. He'll say, oh, this is not required. A lot of time it has happened. Or he will find something that was going wrong since years. And that has also happened. And this is my personal experience. I just share this. I like that experience a lot, the example a lot, because it is a small little thing, but you know how it changes the things, and it actually works. So that was one thing, just to give you a flavor. How do you deal with small, how do you deal with small tools like in risk management? That was about fraud risk. So process and policies, I have said that for fraud risk and reputation risk, policies and process play a very big role. You should be good at writing policies. You should be good at writing processes, SOP documents, and you're good to go for, something like fraud risk. Next slide. So good, this is what your career path will be. As I've advocated, it has to be functional experience first. Then you go with risk analyst. Then you go by risk consultant. And risk consultant meaning you work with each and every function of the organization to understand where exactly is the risk going on, to help them to understand their processes, if there are some documents, some processes not documented, all those things. Then you are a risk manager. You start looking at things, analyzing them, analytically judging them, and also giving your inputs to the functions. And then you become head of risk. Head of risk I have separated from the chief risk officer, because head of risk is generally for, say, a particular area. You would have investment and market risk head. You can have operational risk head. And then it goes to CRO, whereas it's an enterprise-wide risk that we have. Okay? Next slide. Challenges, there are a lot of challenges, but I've just listed down some generic one which will actually which has a lot of impact on risk managers today. So there are a lot of changes in the new regulations. We have to adapt to risk change regulations immediately, but I'm personally very thankful for the regulations that are coming in the risk management area, specifically from the regulators now, because it is actually emphasizing a lot on having a strong risk management function and risk management structure in the organization. So it's good for us as a risk manager. New and complex products, you can understand, you will have questions for cryptocurrency. What do you do with complex products? You want derivative products, you want options and things like that. You should be capable of, understanding and understanding those products and the risk inside that. Third is resistance to change. I'm telling you, this is a very big challenge. People don't want to change. They don't want to change the process. They say if you change the process, that's a risk. Then you are in a trouble being a risk manager. You don't want to. What do you do with people who said if you change the process, you are in a risk? Then that's something that you have to be very, very careful about, and then you have to suggest things that are which will really enhance the risk management of the system. And resistance to change is a very human and a natural phenomena. And I'm telling you, you are dealing with human beings in the organization, and it is very important for you to communicate, develop that culture in that, wherein you have to surpass that resistance and see how you are building up the structure of risk management. Technological changes are good. In terms of risk management, I would suggest we have a lot of tools that have come in. We had dearth of some tools initially for operational risk. Now I'm finding there's a lot of tools that have come in. There are customizable tools. There are things that are standardized, globally accepted things. So in India, I would say that we are still evolving in that particular arena, but we have now advanced quite a bit. So you should get in, you should try and see what all tools are there. And technologically also, from perspective of external environment, things like digitalization, cryptocurrency, and whatever you can think about, fintech, these are things that risk management also has to deal with. So the essence is keep the pace, be as fast as possible, and try and learn everything. I would just highlight again, analyze yourself, your core competencies, and then work towards that particular area of risk. Next. There are perception gaps, again, which will help you to see the challenges that you meet. So everyone thinks risk is an ex-post phenomena, which is very sad thing for people like us. It is not. What we are doing in operational risk and the tools of operational risk, we are taking care of things that can go wrong in terms of processes and policies and control testing and RCSA or investment risk, and now we have ex-ante investment risk monitoring also. So I think that is not something that is happening. We don't do an ex-post analysis always. Risk management is another tick box activity. That was quite some time it was like that, but I'm thankful to the regulatory changes, and also, should not be saying that, but whatever events that have been happening across the world, we have a lot of emphasis now to the risk management function. So it is no more a tick box activity, but I would say traditional organizations still has the feeling, so you may have that as a challenge when you go to them. Risk monitoring is a responsibility of risk manager. This is something that we will have to communicate to the whole organization. Every employee is a risk manager. Like every one of you sitting here is a risk manager for me. So when I go and talk to my function heads, then when I go and talk to my SPOCs, I say, I just have you as my team. Every employee is my team. So this is how we will have to work. Otherwise, it doesn't work. And risk management is technical in nature. I would say it is to a little extent, but we need to have softer skills also there. We can go to the next slide. So good news, we have a lot of opportunities in risk management. Personally, in MF industry, in investment business, there are a lot of opportunities. So a very good news for you all. Try and think about where do you want to stand. I hope I've helped you in understanding where exactly you should be looking at, what exactly you can study. But if you are serious about risk management, you have a lot of opportunities coming up. They are there in our own country also, and abroad, of course. You have risk management as an essential activity, wherein top management is emphasizing, no choice. Even the regulator is emphasizing risk management. And now, by now, I think we all know we need it. Okay, and there are a lot of tools also that I've already touched base on. So this is how we have a lot of opportunities and the challenges that we have across. Next slide. ESG is the favorite topic everyone wants to cover, and I was told that I should be covering ESG risk. I just want to confess here, ESG itself is a very big topic. We should be covering it separately, but just to give you a little flavor of what a ESG risk would, and as Praveen also highlighted, ESG, the most important part in the ESG is the data. Till I remember 10 years back, we were struggling with, we want to invest in ESG companies, we want to invest in ESG, but we don't have, how come? because people are not, organizations don't know how to disclose this. It's not structured. Since they are not, we are not following, but the data is not structured. So we definitely need to have some space there. It has evolved. I would say it has come a long way now. We have more of the ESG data in place. We should know where exactly the ESG risk is coming from. For that, you will have to look into that focus area for sure. But these are the few of the topics that ESG risk covers. We have a lot of certifications in ESG risk also. That's an area in itself you can think about, very seriously. And there are risk scoring and risk rating, all dependent on risk data. So that is where we stand from ESG perspective. Companies like I have been working with are very, very sustainable oriented kind of, they used to believe in walk the talk. So we were not using any paper in the organization. We did not have, we were practically not allowed to print even one single sheet. So because we wanted to be sustainable, we start, doing things. So that is how people are developing those kind of environment in the organization. So there is a lot of awareness now, and there are a lot of tools, risk management certification you can get into. But I would just like to highlight and state this. We as a risk manager definitely have a lot of responsibility for our organization, for our country, and for sustainable growth as a large. So we have to think it from that perspective. If you really want to be a risk manager, I would suggest have that vision in mind. It works. When you have that vision in mind, you want to just mitigate and see how the risk can, and you see it till the last bit. Always try to see it till the last bit, what risk finally it can lead to. And that is all I think would convey what exactly you mean by ESG. Next slide. Good news, we have come almost to the end of my presentation. So, risk management is faculty of human nature. I said that on the first slide. And by now, I hope you all understand what I mean. There is a huge demand. You have to analyze which area you have to get into: investment market, operational, technological, cybersecurity, ESG for that matter, whatever. You have to develop skills based on your core competencies. Please analyze yourself first and see where exactly you put forth yourself. And you have to be clearly defining your vision in life as a risk manager. And please keep that bigger goal in mind always of having a sustainable world. And last but not the least, be risk aware. And that's all. With a last final thought, I would leave you all for the Q&A session. If you can go to the next slide. Risk management is a function of 20% processes and 80% culture. So here on, we are standing again with softer skills we all need to have. Develop the culture in the organization, in the society, in the country, and world at large. Thank you.
For the Q&A.
Thank you.
Hello. Yeah. Thanks for the session, ma'am. It is nice to see that so many new roles have opened up at the fund management industry level, and also 80% culture has to be there for risk management. A few questions from my side before that.
Yeah, sure.
So, ma'am, you were talking about cybersecurity risk as part of a slide. So, in the mutual fund industry, we use a lot of personal data of the investors. So, what kind of opportunities do you see to manage cybersecurity as a fresher if they want to enter?
So cybersecurity is well segregated, I would say, stream of things. Cybersecurity is very seriously taken even in the regulator by the regulator. We have all the things, even cyber audit for that matter happens differently in the organization. Cybersecurity has, the regulation has given a lot of extensive checks that we need to have and systems in place that we need to have and standards that we need to have from IT security perspective. That's a very, I would say, very important and a good growing area also in risk management.
Thanks, ma'am. One question we got online was that if I have a career made in treasury and if I want to shift to risk management, then how is it possible?
So I would like to understand treasury, you want to relate it to that?
So the question was that I have a career of 12 years in treasury and now I want to shift to risk management. So what would I need to do?
Yeah, definitely. If you have such extensive experience in treasury management, I think you really understand the finance part of it, basically all the risks related to treasury, and also it's a good experience, I would say. So you can get into risk management, but I don't know what would be the hierarchy where you get into. But it's okay to get into risk management field because that's a relevant experience as well.
Thanks, ma'am. One more important question is like, what kind of tools would you like candidates to have an hands-on experience to manage investment risk?
Investment and market risk, as I said, needs lot of analytical skills. You should be having good professional, qualifications, say, to handle those kind of particular skill like analytics. You need to understand number, data structuring. As you know, there is a lot of unstructured data that is coming in, so data consolidation, structuring, interpretation, all those things is something, if it is of interest to you and you have a qualification related to that, investment market risk is a good area. One more thing that you need for understanding investment market risk is to understand investments. So I would suggest that you should have a course that you have done, which is also teaching you on the investment side of it, portfolio management or, investment business.
Cool. The one more upcoming topic, as you all said, was cryptocurrency. So if you're investing in cryptocurrency, what kind of risks you should look at? And do you see now even small companies issuing coins and currencies instead of issuing shares in future, in the next 10 to 12 years?
That's an unstructured part of, I would say that's an unstructured kind of thing right now in finance. Cryptocurrency is not really highly regulated as of now. I would suggest that investing in cryptocurrency is still to come. If people have already started investing in currency, and personally believe currency is for exchanging and buying things. You don't invest in currencies like that. But jokes apart, I would just say that cryptocurrency is keep your monitoring tab on. It is definitely a bigger area that needs a lot of insights into. I would not tell you to just jump into like that. So it needs a lot of preparation to get into a risk related to cryptocurrency.
Yeah, I understand. Monitoring your cryptocurrency is very important, especially the way the markets
I've invested in it.
Cool. Now the next question was around fraud risk. If you can just elaborate what exactly will be covered in fraud risk and what kind of skills can the freshers develop to manage fraud and detect fraud?
So fraud risk doesn't generally stand all alone. So you will not have a generally, so what happens, though now we have something related to fraud prevention policies in the organization, we have fraud-related committees in the organization, but I would not say that you have a department which is only dealing with fraud. Basically, fraud would ever happen because of failures and processes and policies that are there in the organization. So if you belong to a risk management team, you can as well get into that direction because it needs to be forensic in nature, very, very detailed oriented insights that you need for that kind of risk manager, being a risk manager for fraud risk management. But that I personally feel needs a lot of experience also.
Thanks for that, ma'am. One more common question we are getting is around the recent IPOs which are coming, and especially of the startups. So do you believe that that we should invest in loss-making companies if they're coming up with an IPO?
Not an investment manager. I'm a risk manager. I would say that you have, if you're investing in any place, just see the governance part of the investee company and see where exactly they are invested into and be risk aware.
There's an online question, ma'am. What would be your view on the CFA credential for risk management, like you had mentioned?
It's a very good certification, and as far as I have understood, and I have also seen the curriculum, it touch bases very nicely on the risk management aspects. It covers on, credit risk, liquidity risk, investment market risk. So, yeah, it gives you a good professional experience, knowledge about risk management as well.
Okay. One point you mentioned, the importance of reputation risk. So again, if you can elaborate that, if you're a fresher and if you want to go into that role of identifying the reputational risk, the business risk, strategic risk, then how would they be able to build that skills?
So risk management, the way it is structured now, is going to be an independent risk function. You will have to work with the risk management team only. There's nothing called reputation or a fraud risk for that matter, I would say. If I have communicated that, my bad. But what I mean to say is risk management as a whole is something that you have to take care. But in that, if you want to choose certain stream later on, that those are the skills and capabilities or core competencies that you require to go in those areas. So reputation risk is something which is not an area in itself. It should be taken care of by the operational risk bit that we have already in the risk management function.
Great. You are also stressing on data science, like, what kind of roles would be there for a data scientist? Will there be all automation only in future? So, to build that skill earlier, what would you suggest to our CFA charter holders?
Data science is very important specifically from both operational and investment risk perspective. Because ultimately there is a lot of data crunching that is required even by the risk management function. Data science is a good place to start and good qualification to have to get into risk management area. So I advocate that together with, of course, the softer skills that you have for communicating the risk, building up the culture.
Okay, I've got a question about the macroeconomic factors, basically, looking at the war situation and the probable US recession. So what would be your views? Like, it can be anything.
Views on what?
On the war situation, how will it impact the Indian markets?
I will give it to the audience. I don't want to answer any socio-political question. But from risk management perspective, it will be a very big event for us to learn a lot. And I'm sure it will come out with a lot of learnings for us as a risk manager.
That's a nice answer, ma'am.
Sorry if I have not answered your question.
No, it's a perfect answer. About the Stewardship Code, now even SEBI is emphasizing a lot on reporting of Stewardship Code by not only mutual funds, but also alternative investment funds, portfolio managers. So if you can just stress that what kind of disclosures are made in the Stewardship Code, and if you want to become a manager to do the reporting, SEBI reporting, then what skills you would require for that?
So stewardship is basically capturing the governance risk part of it. So basically it's a compliance thing for me. It's basically disclosures that we do of all the stewardship codes that we have, which takes care of the investments and where we are investing into, what are the kind of governance due diligences that we do. So that is something which we have as a set practice or disclosures for that matter in a company. So I don't see anything that from risk management perspective I need to add, but yeah, it is a good area wherein a lot of research is going on, and then it's taken care by the compliance function.
Okay, I think there is one hand raised from there. If you can just pass the mics.
Yes.
You can just say, okay, he's saying first.
Yeah, good afternoon, ma'am.
Hi.
My name is Bhavesh. My qualification
Bhavesh.
is FRM, and I'm working as a dealer
Great.
in Indian Bank, Forex dealer. So
Okay.
my question is how the risk manager's performance being evaluated. This question arises from the fact that from the dealing room's perspective, the risk management function is like a drag to us, and when the optimum performance is there, either the risk management, whatever metrics are there, risk adjusted return, whatever optimum profit, that goes to the profit centers. So risk management performance, how it is being evaluated.
Till the time there is no risk event that has happened, risk manager is performing very well, I would say. But in materialistic terms, I think it is very well handled by the regulation lately, wherein they have actually assigned key result areas related to risk, and it is very well linked to the performance incentives of the risk managers as well. So if there are things, loopholes, and the functions wherein we are having risk events which might not be there as a bigger event in the industry, but are being tackled, those are the things which are deliverables for us, and they are being linked to the performances. So broadly, it should take care of that. I hope I've answered your question.
Yes, ma'am.
So as ma'am said, it's 80% culture and 20% risk. So you should not wait for a risk event to happen, right?
Ma'am, I have another question.
Yes.
It's related to the biases. Like everyone has the biases, be it in the investment, be it at other places. Even in risk management, we have some qualitative inputs. One can have his or her own biases. Like I can overestimate the risk or underestimate the risk. How these biases are being addressed?
So when we work with the risk function, I'm sure you're talking about the functions biases of having their risk as critical or medium or high risk. So when we work with those functions, at least with the experience of risk management, we are able to analyze. There is a very good quantitative methodology by which we analyze that through impact and likelihood matrix. If it is impactful in material terms and it is likelihood, many times its frequency is high, accordingly we arrive at the metrics. So it is something which we can actually evaluate, not a big problem.
And the last question, with your permission.
We have time for 2 more questions,
That regarding CDS, credit default swap, RBI has recently launched some guideline, master circular regarding that. So what about the preparedness of this infrastructure here in India?
In terms of risk management?
Yeah, it's in terms of risk management because it's
Or overall you want to know?
No, overall for the risk management purpose, because in this for the asset managers and the risk managers are great.
But I don't think that was an issue any which ways. Tools are there to take care of that.
CDS is more of a banking product. I think the
But that's
regulation-
okay. It's not I don't think that's an issue, I think.
Because it's falls in the risk transfer mechanism. Like earlier, here the derivatives are also restricted. So that way we can transfer the fixed income securities risk.
Yeah.
That person.
No, that can be handled by tools.
One last question we'll take. Yeah.
So my name is Janay, and I too have completed my FRM, and I'm studying for
Hi.
level 2 of CFA. So my question is, in Indian context, does risk management as a function exist in the companies other than the banking and financial service? Because I haven't come across any roles except for treasury in which,
Really? unbelievable. I think mutual fund industry needs a lot of risk managers. I can
That's what I'm
assure you
asking.
of that.
So other than the banking and financial services, which is
Which area you want saying? Other than banking and financial services,
manufacturing firms or oil and gas or any other, have you come across, do you know if these functions exist as a separate department?
yes, they do. They do. In fact, even when we are as evaluating the companies as an investee companies, we see that they have good risk management practices. So this is not something only finance domain which will have. There are manufacturing firms also which should have a good risk management team.
So we'll end the session here. Thanks for your time, Dr. Leena. It was very informative. And it's good to know that the mutual fund industry is hiring risk managers. So I think after the lunch break now, you will be meeting some employers as well. So make sure you use the skills which Hansi just suggested in the morning.
How many risk managers do I have here? That's
Only
all.
two, ma'am. You can.
That's all. Okay, just jokes apart. I wish you all the best. And yes, there are a lot of opportunities. Go ahead, look for it, and just analyze yourself with your core competencies. All the best. Thanks a lot for hearing me for so long.
Thanks.
Thanks, Dr. Leena, Archit, for a very insightful session. At 2 p.m., we have our next session for employer engagement. Those sessions are divided into two auditoriums. Details would be displayed on these slides shortly. So you can pick and choose which session you want to attend. And we have meet and greet at 4:15 p.m. We have an announcement to make. Mr. Jayesh Gandhi would be available for meet and greet between 2 to 4 p.m. instead of scheduled at 4:15 p.m. Now we may break for networking lunch. Can we have employer session details on screen, please? We have total 4 sessions between 2 to 4 p.m. You have details on screen, and accordingly you can choose to attend the session. Now we can break for networking lunch. So one session is in Rivia ballroom, and one session would be in this ballroom only from 2 to 3 p.m. And then second round of session will start from 3 to 4 p.m., same both the ballrooms.
So the employer interaction sessions are happening in ballroom and Rivia. Rivia is just opposite to the reception on the same level. So you can pick and choose which session to join. It will be a simultaneous session which will be happening. So the details are on the screen. You can pick and choose which session you want to join.